Hello and welcome to the Jensen. My name is Sanjeev. Today we are going to discuss the topic global recession affecting India. This is one of the recurrent topic of the debate. To support this, we are seeing a lot of news not only in India but also worldwide regarding recession. However, this is not a new topic to know. We have been witnessing this for past so many years. Not to forget 2008 recession. But the global conditions then and now are completely different. Especially in India, there are a lot of structural economic reforms has happened. Now, to deep dive into the topic, what is global recession and how will India get affected by this, we have an eminent professor, Abhishek Naresh, with us. To give a brief introduction about Professor Abhishek, he did his bachelor's from NIT Jamshedpur, post which he did his MA economics from Indira Gandhi National Open University and completed his PhD in economics from Indian Institute of Management, Bangalore, which is India's one of the top business schools. He is currently an assistant professor at Birla Institute of Technology, Mesra. Professor, thank you so much for giving your time to our viewers and going to share your views.
Thank you so much for having me. Yeah, it's great to be with you.
Yes. Professor, to start with, let's go with the basics. Can you explain us what is GDP?
So see, GDP, there are two aspects that you need to know about it. Firstly, if you just go by the definition, GDP is nothing but the total value of the products which are produced within a geographical boundary. So if I were to say in India, suppose we just produce 10 bananas and 10 mangoes, and the price of 10 bananas is 1 rupee, and each banana is 1 rupee, and the price of mango is 2 rupees, right? So the GDP of that nation can be said to be 10 bananas multiplied by 1 rupee, the price of each, and 10 mangoes multiplied by 2 rupees, which is the price of each. So the total is 30 rupees. So that is what, in a very simplistic term, GDP is. The second aspect which we should know that how the concept of GDP basically evolved. So if you see, the whole concept of GDP came up from Simon Kuznets, an American economist, and it started after the Great Depression and specifically after the Second World War. It is an accounting practice, if you want to structure it that way, and it helps you to keep a track of what the economic valuations of all the assets and what is being produced in the country is, which helps you to better manage it. And specifically after the Bretton Woods of 1944, that you see when IMF, World Bank came into being, that GDP became an indicator of growth and progress, and then a lot of studies were conducted on how GDP affects unemployment, inflation, and all these aspects. So in a very short way, that is the whole gist of GDP.
Got it, Professor. So going to our topic, so we know that America's previous 2 quarters GDP fell. So can you give us the reasons why it happened and what's happening in America?
See, one thing that we need to know is the context of what is happening. So this is all the aftermath of the COVID-19 pandemic that hit us in 2020, right? Now, what happened during the COVID-19 pandemic was that the supply chains actually got disrupted. There were widespread lockdowns leading to closure of factories. So that was one reason why, when the supply chains are disrupted, then you will have inflation, because the demand, although it is less, but still the demand is there, but I'm not able to get the goods, so the inflation will skyrocket. Now this is one of the aspects that is happening with the US. So if you see the US data, then inflation is at a 40-year high, somewhere around 9%.
Yes.
And even so, to control inflation, now what the central bank will do, automatically it will hike the interest rates. Now once it hikes the interest rate, real estate becomes costly, so the buyers don't want to buy houses. So this leads to a collective slump, and add to this whole mixture the
Yes.
Ukraine Russia crisis that happened, right? So the oil prices again skyrocketed because of it. So the double whammy which actually happened is resulting in what we are seeing in US. The job market did promise a growth, but that growth is also gradually slowing down. Now all these when
Yes.
combined will lead to a recession. So last 2 quarters that you see in US, that the GDP growth has become negative. So that is the whole reason why we are witnessing that, especially in the context of US.
Got it, Professor. And coming to the counterparty near to the India, can we discuss a brief about Chinese economy and why it is underperforming these days?
China, first of all, we must know that the data that comes from China, I mean,
We can't trust.
it is relied upon, but yes, it is a bit controversial because the way China went about with controlling the pandemic and the numbers were down quite quickly. So there was a
Mhm.
conflict that did it really happen or not, right? And the
Mm.
whole Chinese policy that if you see right now as well, that the zero COVID policy, right? That they will get the COVID rates to
Mhm.
zero. So, like other countries are now coming to terms that just like flu or any other illness, COVID will persist. But this Chinese policy of zero COVID, which is still leading to lockdown. So, if you see the industrial areas in China recently, a tourist place, Chengdu, I think a
True.
couple of weeks back, Tibet as well, they just impose
Mhm.
lockdowns. So that
Yeah.
lockdown basically leads to widespread closure of industries that again disrupts the supply chain. So that is, and China being one of the industrial major centers of the world, right? So if
Mm.
that happens, the whole global supply chain gets affected. So that is one
True.
reason why I think China is still struggling to come out of the pandemic.
Got it. And recently, if we see Indian Monetary Fund, IMF predicted that there will be only 3.2% growth rate globally, and there is a
Mhm.
15% chance of recession for G7 countries. Based on what
Mhm.
factors does IMF say all these things?
See, so first of all, how is a recession actually classified? So, if you see NBER, National Bureau of Economic Research of US, it says that a significant decline in economic activity over a couple of months. Right now, we are witnessing that in US for the past two quarters. Even
Mm.
Europe is not very optimistic now. Europe is quite on the back foot in terms of the economic development is concerned. So. Why IMF is
Mhm.
predicting that first of all the supply chains were already disrupted, right? As I mentioned before.
Yes.
Secondly, if you see the Russia Ukraine crisis and the war there and the subsequent imposition of all the sanctions on Russia had a very huge bearing on the European economies because Europe is heavily dependent on the gas that is being supplied from Russia. Now, if
Yeah.
if that is happening, then in that case, the issue is the prices will shoot up, right? Because the gas becomes costly. You may have to get it across the Atlantic from US, and then it
Mhm.
subsequently has a bearing on your agriculture and other things as well. So if you see, even Europe is battling a very high inflation, and the outlook is really bad. And 75 basis points is what ECB hiked the interest rates, and more will be on the trot. If you see for the energy sector, so recently there was a demand from the energy sector in Europe that at least some liquidity must be provided to them in order to battle it out. But ECB has right till now not accepted it and has said that that can't be excess liquidity can't be provided to help out the energy sector as well. So based on these predictions, China is down because their manufacturing is not performing at the levels of pre-COVID. The Russia-Ukraine crisis is hitting Europe pretty badly. Again, similar issues with US with the high inflation there and the Fed stepping in to raise the interest rates. So on these pointers, basically, IMF is predicting that there's a scope of recession, especially higher in the G7 developed economies, which are there.
Yeah. So just a follow-up question on this, like how badly this Russian-Ukraine war is impacting the world? Because we know there are certain impacts. A lot of analysts predicted that may not be so high, but according to what is the current situation of Russian-Ukraine war?
See, the biggest fallout of the war was the crude oil prices, right? The crude oil prices
Mhm.
shot. Now they are actually coming down, and they are coming down because even the countries producing crude oil are expecting that there will be a recession and slowdown in economic activity. Right now, the oil prices are high. Nobody is going to buy them. So yes, so that
Yeah.
is one issue with it. Now the fallout, if you see, of the Russia-Ukraine war, so Europe got directly affected because of the sanctions and other things that was imposed on them, right? Then
Yeah.
in India as well, if you see on that fact, there are a lot of earth moving equipments that are actually imported from these Eastern European economies. Like I think there's a company Belas which gives us coal excavating instruments. So which is from Belarus. So if there's conflict in that zone, then exports and other things also get affected. Uh, there were a lot of pharmaceutical firms from India operating out of Ukraine. Medical students were also quite there in Ukraine. So
Yeah.
the ramifications of it are quite huge. Plus, if you see now the countries are sending in aid and other military supplies to US, that's again a drag on the economies which are supplying that. So that's actually a domino effect. Now, in a globalized, connected world, that is the issue which happens. You cannot stay out of a crisis. A crisis in Ukraine and Russia will have bearings as far as India and other economies are concerned. So that is how the whole
Correct.
dominoes effect operates in a globalized economy.
Got it, Professor. So continuation to what we are discussing now. Now that we, with above questions, we have seen and understood the current global scenario, how recession is affecting other countries. Now coming to India, how will India be affected by the global recession?
See, in a globalized economy, you will be affected. If somebody says India will not be affected, that is actually quite false, right? Now, the thing is the
Okay.
extent to which India will be affected. Now, the verdicts are quite split, but I personally feel India will not be affected very severely, but I mean, moderately, there will be effects because export wise, if you see, we were growing in exports and we did have a robust export, especially like merchandise to Europe and US. Now, the Europe US markets are down. Then, in that case, the exports will be affected. So, the exporting industries which are based out of India will also be affected. So, that is one. Especially if US is down, the IT sector which is there will also be affected. So, the IT exports from India will also take a hit. The good news as far as the whole crisis, that the silver lining I would say is that if you see
Mhm.
the oil prices have very sharply come down in the last 2 weeks. So that is a less
Mhm.
drag on the Indian economy as far as our imports are concerned, because still we are importing 85% of our total oil. That's a huge drag. And the last couple of months you would have also seen that the rupee had depreciated, given there was a very flight of capital, FPIs, if you see, going out of India. Now if that happens, basically it's supply and demand. So if there's too much demand of dollar, then obviously rupee will depreciate. Right now I think 79.6 or some value we have been able to hold it
Okay.
off at. But
Yeah.
yes, so as long as the volatility will persist, if the flight of capital persists from India, yes, there will be effects on investments, the stock markets here. But domestically, there's a lot of scope actually, which is still with India, where we can counter manufacturing if we are able to take a cue. Even if you see the PMI manufacturing and other data which was recently out, then we are
Mhm.
not doing that bad. We are holding out to a decent level in it. And inflation also, if you see, the Indian inflation hasn't been as bad as the developed countries are concerned, right? So it did go
True.
above. It is definitely above the RBI band of 2 to 6%, but still right now around 6.75%, which is still manageable in that context. So these are the silver linings for the Indian growth story is concerned. But given the
Mhm.
exports of merchandise exports, yes, we will definitely be affected if the global recession sets in.
Got it. And in India, we are seeing these days a lot of structural reforms or structural economic things are happening. Especially, a lot of people are saying about domestic market, domestic savings, and domestic investments. So, can we
Mhm.
go? Let us go by point. So, what are they referring here, the domestic market, and how is it very strong for India?
See, when you say that a lot of infrastructure works are going on in India, so if you see, this is something that is being pointed out a lot of times in India. The demand. to put it very simply, there's a supply and a demand curve, right? If you see
Correct.
where they intersect, the equilibrium happens. Now the thing is, if there are
Happens.
supply side bottlenecks, then supply will be restricted or constrained. Now the thing is, which has
Mhm.
lot been pointed in India, are in India there are huge supply chain bottlenecks. If you
Yes.
see in agriculture, if you see in even in roads, so there
Mhm.
are, so because of this the prices are actually pushed up. In this context, if you
Mhm.
see the in agriculture bottlenecks, so in India what is quite interesting is you have a very cyclical pattern of inflation. Now what happens is, when the
Okay.
harvest season comes, right, the
Mhm.
vegetables flood the markets, and when the vegetables flood the
Yes.
markets, the prices crash. Now, when the harvest
Crash.
season is gone, then what happens is that the prices again start climbing up. So instead, so compared to a developed countries, because we had these supply constraints, the inflation is pretty cyclical in case of India, and that is actually some points which you see right now in the Monetary Policy Committee notes as well, when they say that in the second half with
Yeah.
a good sowing pattern, we will be able to
Mhm.
contain the inflation. Right. Now, a lot of work is being done in India right now to improve the infrastructure, especially if you see the highways. The highways
Mhm.
are being constructed in a very large scale and a very well made manner across India, which will actually help you to reduce the time that is being taken from transporting maybe tomatoes from Ranchi to Delhi, right? So, those
True.
things actually help you to contain the prices or
Mhm.
the destruction in terms of rotting of things are concerned. The secondly is GST and other things which were implemented in India. So one can debate on the merits and demerits and the way it was implemented, but it provides a very
Yes.
rational tax system and helps to avoid the jargon. So because earlier there were statewide taxes and all these things which one had to actually legally get through, but now with the GST system it's quite easy. And even if you hear the reports, then the truckers find it very convenient now to travel across trade borders. So these all infrastructure and other things which are happening in India will actually help to bring down, I think, the prices and help in terms of smoothening the whole infrastructure needs and the those things are concerned.
Great, professor. So this is a clear explanation on domestic market. Coming to the domestic savings, traditionally people are saying that India is more of a savings-oriented country. So how is this related to our topic here of recession?
See, yeah, so what is actually said is that typically when suppose when you get an income, right, you consume a part of
Mhm.
it, when you do an expenditure and you save it. So what is, if you
Mhm.
see the data as well, then as you mentioned, India is a savings led economy that people tend to save a lot. Now
Mhm.
one of the aspects of that is because India is still quite an informal economy, right? If you see,
Mhm.
there's a very large section of India which is employed in informal sectors.
True.
So
Mhm.
people tend to save that money. And if you see the classical economic explanations, they say that the savings should then go towards investments, right? Savings is what drives
True.
investment, and then it should lead to it. But that gap exists in India, right? That the savings
Yeah.
should translate to
Yeah.
investments. Because a lot of money in India that you see, gold is a very safe investment which people consider, and people tend to buy when the bad times come, then people tend to buy gold. So
Yeah.
that is what happens in a very Indian context. And I feel that that is more because we are quite an informal driven economy. The formalized sector is still quite small as compared to the informal sector.
True. And continuing with your point, like a lot of Indians are not the savings is not converting into the investments. However, contrast to the West countries, India is not heavily driven on the credit cards culture, right? And we are still seeing
Hmm.
some kind of investments happening recently. Like we can see the Zerodha accounts having a spike during COVID and other things. So how
Hmm.
this domestic investments are going to help India in terms of recession?
See, the thing is with what happens is, if I want to start, suppose, an industry, right, I need investments.
Yeah.
Now the fact is,
Yeah.
where does the money come from? So one
Mm.
aspect is that I take loans and other things. Now, if even if I want to take loans from banks, there has to be certain savings with the bank, which actually helps me to take a loan, right? Because the bank will,
Yes.
on top of its saving, help me to get some loans. The other
Yeah.
is I can approach the stock market and try to get some loans. Now, again,
Yeah.
in stock market, somebody has to buy my stocks. Now
Yeah.
in case of emerging nations, what happens is there's a crunch in terms of investment, so that is why
Mm.
people might focus a lot on FDIs and
Correct.
FIIs, which should come and which should help and support in order to build up industries. But
Yeah.
if suppose the domestic sector is pretty strong and resilient and is able to support investments, then that is
Mm.
pretty good. So even now, like for the till July, when FIIs were withdrawing back from India, in August the trend changed. But that is
Mm.
why a lot of analysts did mention that it's a great opportunity for India, Indian
Mm.
people and the domestic market to actually prop up their investments and help to domestically grow the Indian market. Because if the foreign markets are volatile, then yes, the investments have to be domestically driven.
Got it. So compared to the when we had a recession in 2007-8, what do you think during that time? Because India is not greatly affected also that time also. So based on our discussion right now, we have done significantly great things in our economy side. But in 2007 and 8, what do you think the factors which really saved India from having adverse effect of the global recession?
See, for that, one has to understand why the 2007-8 recessions actually took place. Now, we all know there was a housing bubble crisis,
Well,
which was fueled by the subprime mortgage and other aspects which happened, the derivatives and the credit default swaps. Now,
true.
India, compared to that, the banking sector is quite still traditional, right? We don't have
Mhm.
these fancy derivative instruments and other things. There are a lot of regulations when it comes in terms of the loans that the banks have to provide. Now, that is one reason why the Indian banking system stood resilient at that time, right? So in
Okay.
India at that time as well, because you didn't have a collapse of the banking sector in India, the banking sector was resilient, the financial sector was resilient. Although the recession happened in US, but still we were contained a lot from, we were not affected a lot by that. uh, Similarly, I mean, I won't say similarly, because COVID actually had a very interesting impact, which was lockdown. So rather
Yeah.
than 2007-8 crisis where there was no lockdown, so it's like the companies are not working, so that is why what was called that the liquidity injections in US, that you provide liquidity to the market will function. But in case of COVID, this won't happen, right? Because even if I give
Yes.
money to people, then what will happen is the factories are not working, the industries are not working. So, so what will you do? Now, coming in terms of the Indian response to the COVID crisis. So again, being one of the largest economy in the world, we closed
Mm.
down quite heavily initially 1 or 2 months, and then we tried
True.
to open in a very gradual way. But yes, we tried to actually, some of the policies, if you see, we tried to hit at a very exact point, like
Mm.
providing emergency credit to MSME sectors, because we realized that MSME sectors will fare badly and they employ a lot of people, right?
Mm.
Similarly, if you take the case of real estate sectors, and even the some packages which were there for the tourism sectors as well, because India also is a very large tourist destination. So some of the policies which were quite pinpointed helped us to uh, stay put even during that time. And another aspect, again, is the Indian agricultural sector. Now, I personally believe it's an underdog in Indian context, because agriculture has the capacity always to absorb the extra employment in India. Because
True.
even during COVID, when the lockdowns happened, a lot of people went back home and started working in agricultural fields. They shot a lot of shadow employment. So even during that time, the agriculture sector as well remained resilient. So these factors actually helped us to stay buoyant even during the
Mm.
COVID crisis. And even if you look at the data, the V-shaped recovery that is being talked about. So yes, we did
Yeah.
have a V-shaped recovery. Although yes, it did taper out because finally we are in a connected world where the happenings across the world will affect us. So yes, so those are the concerns as of now.
Right, Professor. And finally, to conclude, like India, we know recently the economy, when we say it is highly driven by the service sectors also. So how do you think like service sector acting as a shield to us in all kind of economic crisis?
See, I won't say shield because yes, service sector did
Mm.
suffer, especially during the lockdown. If you see the tourism and other aspects of it, but the service sector
Yeah.
actually brings you higher returns. So that is one very key aspect of service
Okay.
sector. If you see the gross value added across sector, agriculture, manufacturing, and services, service sector brings you very high returns. The only issue with service
Mm.
sector is that the employment there is limited. So if you see
Got it.
if there's a constant pie, then a very few
Mm.
people eat the pie in service sector. Whereas manufacturing sector, it employs a lot of people, is capital intensive, and helps you to grow a lot of base. So yeah, so even now the service sector, because India has a very robust IT sector, the BPO sector, the financial services, the service sector have led the growth of India. Even if you see the data for July, and other service sector continues to be one of the shining beacon even in terms of providing employment. So yes, so service sector, I won't call it a shield, but yes, it has been able to give a proper growth to the economy uh, as of now.
Got it. So to conclude this, we covered all the aspects of the global things and what is happening in global aspects, and in India how it is going to affect. We got a brilliant insights from you, Professor. Thank you so much for that. And now that to our viewers also, this topic will be very clear because we are seeing a lot of news in the recent days. Thanks a lot once again for giving your time and sharing your opinions with our viewers.
Thank you so much for having me. It was really nice to come and share the views and also get your questions and share some perspectives on the topics that you have. I hope it will be useful for the viewers as well.
Definitely, Prof. Thanks a lot.
Thank you.